We're going to compare gold to a bunch of different markets today. We're going to use yesterday's numbers, so they're going to be accurate yesterday, maybe tomorrow, but probably not today. Don't worry though, the wider picture will still make sense. Okay, so let's take a quick look at 2022 year-to-date performance. We're going to start with the indexes. The Dow Jones Industrial Average is down more than 11% so far this year. That's not good, but it gets worse. The S&P 500, well, that's down more than 16%. The NASDAQ is down nearly 26%. Well, it can't get much worse than that, right? Wrong. Let's take a look at cryptocurrency. Bitcoin is down 35% year to date. And it's not just the equities and the cryptocurrency markets. Silver is actually down too. Silver is down 6.75% so far in 2022. So that's a lot of red. Everything is down. Well, I guess not everything is down. Interest rates are up, but we'll come back to that one. If you're looking for some green though, gold is still up on the year. It's up 1.3% year to date. And 1.3% is not really a big return, especially if you were hoping to offset losses from other markets. But I think that what we're seeing right now is a really good example of how certain assets can perform relative to each other. And anything that I've mentioned so far is a non-performing asset, more or less. There might be some dividends in there, but they're not big. None of them are creating revenue to pay my bills. They're investments or their savings. And I guess I should also throw cash in there. If we go off of inflation, what a dollar can buy, well, that's down about 8% too. What a way to start a video. Now, don't worry, this is not about doom and gloom. This is about asset allocations and at the most basic level, how to balance out risk. It's also about gold and where that fits into everything. So I've been posting here for about 2 years, and analytics tell me the videos on the channel have been seen more than 6 million times. It's kind of a wild number. Thank you for the views. But I try to be pretty active in the comments, and because of that, because of the views, because of the comments, I see a lot of different opinions on where people feel that gold fits in. Now, I've always mentioned that I see it as one of the few stable assets that I have, and right now, with current market performance, this is about the best example that I would have been able to come up with. But I see comments about how gold should be performing better. And I guess I agree with that more or less, but my expectations and my reason for owning it, it's more about having something that would hold up if everything else was crashing. And that's kind of the situation that we're in at the moment. Okay, so I've mentioned that I've been buying a bit of gold every month since late 2013. Prior to that, I was buying it, but it was sporadic. I've never done it to the point, though, that I didn't have anything left to invest. So I'm exposed to all those other markets, and as I've already touched on, the market performance has been pretty terrible this year. And then on top of that, inflation seems out of control. So not a great year so far, but this has all been short term again so far. I haven't had to pull out any emergency stops personally. I'm not selling gold to pay the rent. And I guess that's a figure of speech, by the way. If I was going to round this thing out, I'd mention real estate, both my primary and investment properties. I'd mention income generating businesses or jobs or however you want to look at it. And I'd have to mention debt. Okay, so here's the disclaimer. I'm not a financial advisor. All of this is just thoughts from some guy on the internet. But if I could quickly rebalance everything I had, my assets, my liabilities, I'd probably leave gold about where it is. I'd always like to have more, of course, but I haven't ignored it. I've been buying what I'm comfortable with for a decade. So I would probably have more in real estate, even if that meant more debt. And then I'd have less in crypto and less in brokerage accounts where I do my non-tax advantage trading. I think I'd leave my retirement accounts alone. The deal here, though, is that the price of entry into income-generating real estate is definitely higher than picking up some Bitcoin now or then or throwing some cash into a trading account. It's not really something that I could simply rebalance on the fly. And I'm not even sure that the current allocations were a mistake. The last 2 years have been just a crazy parade. NFTs, meme coins, GameStop, baseball cards, Pokemon, hell, pick a market index, it went up. So just imagine if you could go back to February of 2020 and tell yourself what to invest in. I mean, I wouldn't even have believed myself. The assets that have been solid for me, though, are physical assets. It starts with the gold. Now, I don't have enough gold to balance out a market crash, and that was never really the point. I'm plenty exposed to all those other red charts right now, but the gold that I have would be enough to get me through a few bad years. That would just help me subsidize my costs if I needed it. Luckily, I don't need it, but I have definitely had a few months of trades going poorly, long-term holdings hemorrhaging, and then finally this week, I just started to get that feeling like things maybe aren't going real well. So this is a gold channel, and gold is doing pretty well. And at 1.3% gain for the year, well, it's not great, but that is my second best performing asset that I own. That's outside of some unique collectible stuff, I guess. But for me, the top performing asset, it's a runaway, it's real estate. And I'm not going to go into specifics there, but that market, and in particular, the vacation rental real estate market, it's wildly positive right now. Everything is booked. Values are going up. I'm not going to get into it further than that, but I group real estate and metals into the physical asset column. Now, there isn't really anything similar between the two, metals and properties, unless I guess you allow the fact that you can actually touch either one of them. But I've mentioned before that both times that I sold gold, it was to subsidize a real estate purchase. And that wasn't a bad thing to me because I do see them in a similar category, at least to a degree. And if I looked at them together on a balance sheet or a financial statement or whatever, they offset any losses that I have in equities or crypto or even the hypothetical losses in cash value due to inflation. Now, what I'm trying to get at here is just balance and diversification. That recommendation for 10% gold in a portfolio, that's not really coming from me. That's coming from actual financial advisors. That comes from situations like we're seeing right now. Now, the markets could get a lot worse, but we're already at the point where you can see the benefit of having gold. Now, if you were not attached to it, if you weren't attached to your gold, let's just say it was a gold ETF, you'd be in the clear to sell it without taking a loss, and there's not much that you can say that about right now. And I suppose if you were to ignore your personal entry point, your average cost, and just look at gold's value over time, maybe pull up one of those charts that shows the buying power of gold versus the dollar over the years, I guess you'd be in the clear to sell without a loss anytime. As for the physical stuff, maybe that's your fallback only if things get a lot worse than they are right now. That's more where I'm at. Now, I do have some gold derivatives and I can move them around if some other opportunity comes up. That is probably what the Jim Cramers of the world are thinking, but the physical stuff for me is there to cover expenses if things get really bad. So even though 1.3% is not particularly exciting, it's doing significantly better than other assets, and that's what I have it around for. Now, this is 12 ounces of gold on the desk, by the way. I see this as 12 months of runway if things went bad. Now, this might not be the order that I'd sell the gold off in, but you get the idea. That coin right there, that is a high relief proof 2022 Year of the Tiger coin from the Perth Mint. There are only 888 of these in the world. So it's probably not being sold off to buy sandwich meat for the kids. So to all those comments over the past few years about gold not performing as it should or how everyone should buy Bitcoin instead, I would just say that if you look at how everything is performing right now as a whole, and then you look at how gold is doing, it's a pretty good argument for having some. I'm not here to argue it in the first place, but this whole thing is a big game of musical chairs. If you like analogies, gold gives you another chair. Now you can take that analogy from there. You can do with it what you want. Maybe it's one of those fold-up camp chairs. Maybe it's a throne. That part's up to you. Okay, so that's going to do it today. Let us know what you think, where gold fits into your mix as a hedge or savings or an extra chair. I'm not really sure I thought that analogy all the way through. Regardless, though, while you're there, be sure to hit the like button if you found any of this interesting. Make sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.